Yo, welcome to another episode of Flipping Miami. I am your host, Raul Balufe. And today I have a very, very special guest, Stephen Bettinger, sorry. And I'm bad with the names sometimes. But Stephen is a really good dude, man. He's a Miami guy. He is a hard money lender. They have properties in Detroit, Alabama. They lend in Miami. They also have a title company in which I close a ton of deals with and offer insane service. Attorneys, about everything, man. Steven's a really interesting dude in the way he started business. To my knowledge, he didn't start particularly in the real estate space in his business career. Then he kind of came in and is absolutely crushing it. So I'm really happy to have him on. And we're going to talk about so many cool things about how he got started, what his business looks like today, and how maybe some of the things he talks about can help you on your journey. But Steven, dude, without further ado, I appreciate you coming on, man.
Thank you. Thank you for having me, Raul.
Yeah, dude.
Good to see you.
We're having a little technical difficulties. We're going to start a little bit sooner, but we're good now. Dude, Steven, share with us a little bit, man. Let's say I would have met you in high school, man. Who was Steven in high school? Were you a shy kid? Were you popular? Did you play sports? Who was Steven back in high school?
No, I wasn't a shy kid. I'd like to think I was relatively popular.
Okay.
I did play a lot of sports. I played 3 sports in high school and then in college.
Nice.
So I've always been athletic and competitive from that perspective.
And you're originally you went to high school and you grew up mainly in New York, right?
Yeah, grew up in New York.
Gotcha.
Went to college.
Okay. So you're in high school. You're pretty popular playing sports and stuff. Were you a good student? Did you get good grades? Yeah,
I got good grades. Yeah, I never really had, it wasn't that academic, but I did do well. Yeah.
Yeah. It's crazy. Sometimes I'm sure you've heard it, maybe some of your buddies or some successful people you read about or something. Sometimes a lot of them are really bad in high school. I've noticed they were either troublemakers or they were just the most loud people or the funny people. And then they get their life together, moving on. And it seems like you had a little bit of both already going. You already were getting good grades, but you were social, popular, had things going on, which is interesting.
Yeah. I got a little trouble too here and there, but behind me, hopefully.
Yeah. Dude, and Steven, when you were leaving high school, going into college or going to more the professional world, did you even have an idea of what you wanted to do? Or did you always think, I'm going to be an investor. I'm going to do real estate. I'm going to do business stuff. What were some of your thoughts coming out of high school, or what you thought your career path was going to be?
Oh, I never really paid much attention to a career path. I didn't, and so I never would have imagined where I am today, back then. One thing, it's hard to be an investor when you don't have any money. So I didn't, so I kind of just winged it a little bit. I've always had that entrepreneurial spirit. I've always wanted to sort of do my own thing and be my own boss. And never really. And my life has taken so many twists and turns from a professional level that it's hard to imagine where I am today. But here I am, right? So
that's awesome.
Doing it for 27 years.
Yeah. What were you thinking? Did you want to be, so you always wanted to get into business, even kind of coming out, or did you have a specific profession you wanted to study or something?
No. I mean, I went to school on an athletic scholarship, so I didn't really I had a job in school, I guess you could say. Every day I had to, be in the field and so forth and so on. So really academics wasn't my whole life there. And then post-graduation, I just, I had nothing, right? It was 1993, and just sort of started my first business, and I failed more times than I could remember. So, I would say, you're not failing, you're not trying hard enough.
Yes.
Like with my kids. But, so you learn a lot. You learn more from failing, quite frankly, than really succeeding.
That's a really great way to put it. And I'm glad you said that. And you kind of just brushed over it pretty quickly. But I think what you mentioned there is pretty big for you, if you're listening, to understand. You don't have to have all the answers coming out of school or getting into your professional life. Steven was playing ball. He left school to do who knows what. And then he just kind of figured out, he made a ton of mistakes, little by little, get going. And if you're listening to this and you have no idea what you want to do next, that's completely okay, right? You're going to figure it out eventually, but you got to take the right steps and maybe take a little bit of a leap of faith. Well, Steven, what was your leap of faith or risk? I always feel like when someone gets into business, there's some kind of risk. Either you're risking your time, you're risking money. maybe you're risking moving to a different part of town or a different state. Did you have some kind of risk that you had to take to start getting into business?
Yeah, I mean, we all took risks, right? We've all, like, to your point, we've all made mistakes, and you learn from your mistakes. But, I started when I was young. I didn't have children. I didn't have a family. I didn't have any financial responsibilities. I was living in my parents' basement, so I didn't have rent to pay. I didn't really, I could afford to take risk.
Yeah.
So I guess whether I realized it at the time or not, I was just taking as much risk as possible.
Yeah.
Trying to be responsible. But again, when you don't have anything to lose, it's kind of, it's a different mindset. When you're starting again in your 30s, 40s or whatever, and maybe you have a family and, a mortgage and other things you got to really be a little bit tuned to. So, yeah, I guess I did always take risk. I was always an entrepreneur. I always sort of had ideas and try to implement those ideas. And, I've started a number of businesses, and like I said, most of them failed.
Yeah, no, I want to get into that a little bit, but that's good, man. You don't have to have all the answers, but you need to have something in your mind that's like, and especially if you're listening to this and you're young and you're living with your family, I think it's great. You're in the best position of power actually to start a business right now if that's where you're at, because you literally have very little to lose other than maybe some money or time. But especially like Steven said, once you got a family and kids and house and mortgage and taking a risk, it gets a little tougher. Steven, what was your first business, man, that you started?
It was an online education business. This was in the early days of the internet.
Interesting.
I didn't know that. Had any money, it was hard to sort of become that big player. So I sort of had to bootstrap myself, and I didn't have any advertising money, so I would do flyers and hang around Penn Station in New York City and sort of just really do everything myself. So
damn,
I built up a nice business, and I ultimately sold that one and sort of got me started into the next few things. But yeah, it was early days. I mean, back then the internet was so flat, and really transferring data, it was not much, but that's when I started. And it was great.
What kind of stuff were you teaching online?
They were business courses. I taught English as a second language. I taught,
cool.
I brought people in from different countries to New York City and I hired speakers for educational seminars, and I sponsored their visas, and I did everything surrounding training. And just being in the heart of New York City, there's a lot of immigrants there that were highly educated but weren't recognized in America for their education, and they weren't being paid for maybe what they should have been, from an experience perspective and educational perspective. So I sort of try to leverage like my relationships in these schools that I did online. And then I had a school right by Penn Station in New York, like a brick and mortar school, where it sort of fed my online courses, because the online courses were really 95% margins, where all the other schools had a lot of advertising budgets and stuff. So I sort of like really try to, again, bootstrap myself to help one business with, a loss leader on another, and, to sort of increase margins and things like that. So that's how I started, and really training.
That's really cool.
Yeah.
That's really cool. Yeah. So you found like that little need. It was very niched. When I kind of heard of it, I didn't understand it completely, but what I understood is that it was a very like education platform, which I think it's brilliant, because when you're starting off, especially real estate or education, those are huge, broad subjects. The more niche you go, I feel like the more money you can make in a consistent basis. I think like maybe at a young age, you were very good to analyze that.
Yeah, I mean, I sort of paid attention to what was going on. I recall there was a busboy at a restaurant in New York, and he was a doctor from Tegucigalpa, Honduras, and he was a medical doctor, and he was, a busboy in New York City. And for whatever reason, his life took him in that direction, but it sort of didn't feel right to me that he should be busting tables when he has a medical degree. He should sort of be helping patients. And the system was a little bit broken for whatever reason. It is what it is. But that's sort of what I sort of that's how I really got involved on like trying to find that niche market of
that's awesome.
Education experience. And so that's really that was
really cool. I didn't know that about you.
Yeah.
So Steven, how was the transition into, I know there's probably a bigger gap, but what was the transition like until how you found like real estate? Or I know that you sold that business. I think we spoke once, you had a different business with like sponges or soap or something in Walmart. I remember. Did you have that business and do real estate? Was it after that business? Like, how did you start finding your way towards lending, investing, those types of things?
Sure. Well, there was 100 other businesses in between training and the bubble bath business that you're referring to that for whatever reason, we don't have the time today, but Yes, at the time I was running, I was the largest manufacturer and distributor of bubble bath in North America. And I
Wow.
owned a series of brands that I bought, distressed brands from bigger companies like brands that you probably have heard of, like Baby Magic and Mr. Bubble, like household names, Calgon.
Really?
These were all names that bigger companies didn't want anymore, but they were great for me. And
Wow.
long story short, I raised about $175 million to make these acquisitions. And I
Okay.
was running around the world, and I had a very nice business. We were about 250 million a year in sales and 530 employees at the time, and really just like a big business,
Wow.
not really making any money. We were just
Really?
making dollars, and I was running around the world and killing myself. And a very good friend of mine, one of my closest friends' brother-in-law was a hard money lender, and he was sitting there, in shorts and sandals and lending money, and, enjoying real estate and an easier life. And I'm getting up every Monday morning and getting on a plane and coming back Friday. I just, it was a tough life. And I would joke around him. I said, if I could ever, I want to be you one day, when I grow up. And I was, obviously in my early 30s. Well, not obviously, I was in my early 30s at the time. And I was fortunate enough to sort of sell the bubble bath business. I had a few bucks in my pocket, and I went back to him after. I said, hey, I want to do what you do. And he was lending his family capital. They're a very wealthy family. And I just said, I want in, let me help, let me get involved. And I co-invested with his family, and then they weren't really aggressive. They were just a very big family. And then I just said, I want to do this. Let's open up a fund. I'll raise all the money. I'll do all the marketing, and I'll put everything together. And then you teach me the real estate side of it. You and your family have all the experience, and we'll sort of partner. And his father-in-law, who was the matriarch, the patriarch, actually was an investor with me, and we raised a bunch of money.
Oh.
And then the world blew up in 08 and 09. So
wow, what a time to get in, huh?
it was a crazy time, but we did everything the right way. We really didn't leverage at all. We paid cash for everything. So when the world financial crisis happened, we were fortunate enough to be able to unwind the fund with actually a tiny profit, where some of my larger multi-billion-dollar competitors literally went out of business and lost all their LPs' money. So we were a relative home run. We returned a little over 2% in my fund, right after the financial crisis, where we had expectations of obviously higher returns, but people taking back 50 cents on the dollar and happy, and we actually made a profit. So I sort of made a name for myself in that crisis, and took some time off. It was painful. We had a lot of headaches, a lot of problems. It's all the things that lenders never want. And some people think lenders want to foreclosures so they can gain access to properties and make more.
No.
A real lender is in the finance business and uses real estate as collateral, not
in the real estate business.
Yeah. So I learned a lot, right? I learned a lot. I got into this business, right, really at the end of the boom, right into the teeth of the bust. And, it was a lot of pain, but we got through it. I've got the scars to prove it. And now I have a backing of some real good investors that, trusted me, and I did a good job for them in a horrible time. And, and I was one of the largest investors myself. So when I went out to other investors or LPs, I said, hey, I have my skin in the game. I have a lot of risk right next to you. So whether you agree with me or not, or want to invest or not, I'm literally next to you. Our interests are aligned 100%.
Yeah.
And
it's so powerful.
So to me, that spoke volumes of, hey, I believe in what I'm doing. I'm willing to put my own skin in the game. I'm willing to work my tail off to make sure it's successful. And then again, when the world blew up, I was willing to work my tail off to get your money back. So, and I didn't take any of my own money out. I stayed until I was the last guy out. And that kind of set me up, from that.
Oh, that's awesome. I think that's so key, man. Like you built so much trust with your people, and you made them returns when nobody else was. And something else that I heard from what you said, I think it's an awesome story of your friend that was lending family money and stuff. So here you were, like you're running a company that you ended up selling, and the company was doing tons and tons of millions of dollars. So typically when I hear that, I think of and you're in your 30s. So a lot of times I think of people running a company in that scale. You think your ego is so high, but you actually came back and you were almost you traded your friend as a mentor, as a coach to kind of the business. So you were really humble coming in hey, I want in, show me what I could do. And I want, if you're listening to hear that, someone like Steven that had a business, was making money, or, in theory, making a lot of money in that business, came back to his friend and said, hey, let me help. what can I do? That takes a lot of humility. I think that was awesome. You did that, and it ended up paying off. Steve, I heard you mention you raised capital. You have this, you raise capital again. Let's speak to kind of like the newer, maybe not the newer person, but the intermediate to person that's doing deals. What are some things that we can think about of how do we raise money, right? How does somebody, a regular person, that's not a wizard on bubble baths and creating all this stuff, like how does the regular dude like raise some money in a safe way that's ethical for both parties?
So let me take a step back. I was a regular dude also, right? So I didn't. Nobody gave me any money to start. It was I just worked hard, and I'm a big believer. The harder you work, the luckier you get. I've said that a million times in my life. Not everybody's a genius. Not everybody, but everybody can work hard. Everybody can be honest. Those things can just happen without any outside things, right? You can just manage your own life. So I always did that, and I was a big collector of people. I've said that also. Like I collected people over the years. If you have good integrity and you're honest and even when the world was falling apart, I was honest with everybody. I said, it's not good. I'm not going anywhere. I'm going to dig my heels in, but things aren't good. And if you're honest and, most people appreciate that, but who knows? In any event, I could look myself and my investors in the face and say, this is where we're at and this is what I'm going to do. So I think that, your reputation follows you, your integrity follows you forever. So if you're raising capital, I think you start usually like with friends and family, like most people do. Those are the people that know you and trust you and love you and support you. And you just try to, look, nothing happens overnight. This is a marathon. Yeah. I literally, I was very responsible with saving. I took whatever I had, I reinvested it. I tried to live below my means at all times. I appreciate that comment about being humble. I've been humble forever. I don't need to see my name on the door. I don't need to see my name in lights. I work hard and proud of what I've done. And I just try to make as much money as I can. So I
love that.
The qualities that everybody can have,
Yeah. It's such a simple way of thinking, but it's so powerful, and that's why I really wanted to get you on. Because I don't think I've heard of you, or we've never spoke about you doing any other shows or things like that. Because I know you're a little more under the radar type guy, but dude, I love that, man. I think that's great advice.
Yeah, to your point, like reputation and doing the right thing, and I don't really advertise. I've been doing this for 16 years. People tell people about me, and when you say you're going to do it, and I have competitors that nickel and dime their clients, and this and that, for whatever reason. I just don't do that. And I say what I'm going to do. And I have good competitors and, it is what it is. Everything's a competitive market, but I grow from referral. And I think that's a great compliment to what we do is by just doing a good job and standing by your word and people will tell people about you. You'd be surprised.
Yeah, I love that. Steve, I want to, I heard about this story and I'm sure you've heard about it and I don't want to mention any names, but what is your take on these hard money companies growing to billions and selling off, specific assets and going tech and things like that, like because you're a really sharp dude. You've been able to grow so many things so quickly because you're still a relatively young guy. What's your take on these like hard money companies, things like that, going so big and I don't know, kind of commoditizing the space, I think.
Yeah, well, everybody's chasing yield from an investment perspective, right? So you have all these big guys, New York, California, wherever they are, these big companies. We all get 100 postcards a day of these advertising these rates and we'll fund, 99% of everything. And again, that's in good times, you could sort of grow your way out of that. If real estate is appreciating, you don't really have to worry about, overlending, if you will, or a higher LTV from that perspective. I don't think that way. We use our own money and we're responsible. We might not be the biggest company in the world, but we can survive, a financial crisis or a pandemic or whatever the case may be. So, in my opinion, a lot of those guys are, if not out of business, will be out of business soon. Because we took a hit. There's a lot of equity. There was an equity hit recently. And when some of those big guys are advertising 90% loans and 100% of your rehab money and things go in the other direction, borrowers are just not going to pay.
Yeah.
What are they going to do with all that paper? They're trying to sell it off to Wall Street and package it up and so forth and so on. And there's no buyer for that. That's when things crash.
Yeah.
Can't guarantee it's going to crash, but I'm pretty certain that some of those big guys are feeling some pain.
They're feeling something now.
Yeah, well, I know they are. A lot of them are not funding. If I say I'm going to fund, I fund. I don't. We don't have to go raise money from anybody else. We do what we say we're going to do, and never be the biggest, but we'll be the most transparent, honest, and fair, and everything's up. And if you like what we have to offer, great. We've never lost a client. There are people that got out of the business, or we never really lost a client for any other reason than out of our control.
Right.
And then our clients get those postcards too, and they call us up and say, "Well, I can get it. I get a cheaper rate here." Okay. they've tried it, some of them, but they've always come back because we're easy, we're simple. At the end of the day, when you look at hard money rates, these are short-term loans. Nobody would ever take a hard money rate for 20 years for your family and your personal credit. It's too expensive. Yeah. But to borrow money for 5 months is, the difference in rate is really nothing. Yeah. To have a lender that will close tomorrow, so to speak, that you can call on a Sunday night and talk about things that won't charge you anything unless it closes. These are relationship building things that I've done over the years that hold value. The big guys are institutional and they have so much money. They have to get it out on the street. I understand their position. They raised billions of dollars. They got to get it out there to start working for them and their investors, show their returns. That's why they're sort of priming that pump on lending on anything and over-lending. But, in good times, that'll work. When there's a hiccup,
No, I think that's so clear. I mean, obviously, none of us know what's going to happen, but it's very clear that there was an equity hit, like you mentioned. And I was kind of curious to hear your take because you've ran big companies before. Those companies are at big scales now. I was curious to see, since you're in lending now, but it makes a ton of sense, man. It's just when people are chasing yield and equity is what's backing you up when it comes to real estate, and you lose equity, it's a simple formula. Well, Steven, dude, share with us real quick. What do your businesses look like now? I know we've spoken a little bit about lending. I know you're involved in some title. So share with the listener, what kind of Steven does and what is his businesses.
We have a title company. It's called Quaker Title and Escrow. It's the same mentality. We do a great job. It's run by a partner of ours, Seth Huberman. He's an attorney. He's brilliant, Ivy League educated. Same mentality. We're very humble. We do the right thing. We're very transparent on fees. I think we're probably less expensive than most, but we do a really good job. And we have offices in Miami and in Boca Raton. We'll go to you. We're bilingual. We do whatever we have to do to service the customer. So now our title company comes with funding also. Deals fall apart all the time. You know this. We could always step in and close. So we're like a one-stop shop. So I'm proud of our title company. It's grown dramatically, just again by referrals and people hearing about us. And so we have that business going. And we've been starting to invest for the first time also in Puerto Rico. We've been doing a lot of development in Puerto Rico. Again, post-hurricane, we sort of paid attention. That poor island got destroyed. Yeah. Going to come back even stronger than ever because they're resilient people, the community. It was a little dated anyway. So sort of this whole rebirth, there'll be a lot of opportunity there. And we've for the first time started buying. We believe in and my mentor told me years ago, lots of people make a lot of money on the high end stuff, millions of dollars on the big end stuff. We like, more of the lower end stuff and cash flow and number of units and less risk per unit. Right. So, consistency. More work, a little more managed, but it's more consistent, more predictable income. And there is appreciation. There is upside appreciation that can be recognized. It might not be in the scale the other way, but there's two sides of every coin. Right. So now we're building out a lot in Puerto Rico. It's exciting. And in Alabama, the same mindset, really buying some really low end foreclosures that are, cash flowing nicely. So,
that's awesome. Yeah. Guys, you can see that Steven, he's taken a lot of his education and his business education, his business knowledge to now start investing. He does hard money. His title company is awesome. I completely use them for every single transaction. And Steven probably knows, but me and Seth have stories and stories of very interesting closings, to fights in the conference room, to, driving across town to sign a closing at night. There's so many things that have happened, and they really are there to help. And they do transactional funding, lending, closings, you name it. But apart from that, I think it's so interesting how you probably don't realize it, but you have a ton of knowledge in the space, but you also have a lot of courage and very little fear. You're like, all right, this looks like a good opportunity. The numbers make sense. I'm jumping in. I remember from our last conversation, I think you were thinking about Puerto Rico 2 or 3 years ago or something when we had lunch here. And a year later when we spoke, you're like, oh, I already bought a building or I invested this. I'm like, damn, this guy jumps in quick. So I feel like you need to have those two characteristics to really crush it. I don't know. What's your take on that?
Yeah, no, look, you got to have, if you look at your pie and your whole risk perspective, you have to have certain money that's not guaranteed, but more, lower risk and lower return, right? And then you have to have a piece of your portfolio, your lifestyle, your business that has a little bit more of an opportunity for higher risk and higher returns, right? So we look at Puerto Rico as it's got that potential of a high risk, hopefully not high risk, but a high return.
High return.
But when we look at everything we do here, it's a small percentage of everything. We like to, every day make sure, everybody's paid, things are growing in the right direction. And, things compound nicely. So if the harder you work, the luckier you get. If you continue to, push and the sort of the fundamental investments in lending and take your shots here in Puerto Rico and other things like that, you could sort of increase returns when they work out. And of course, unfortunately, if they don't work out as planned, it really doesn't hurt you. So we sort of pick and choose.
I like that.
Again, not rocket science, but the hurricane destroyed the island.
Yeah.
It's still beautiful Puerto Rico. It's not going anywhere. One day people will go back. This was our mindset. One day people will go back there and vacation and invest and, go to school there and open stores. And it's a big community.
I think so.
We thought it was a great opportunity to get in after the hurricane. I think we're right.
I love it. Kind of like last question here. We'll wrap it up, and then I want to tell people how they could reach you if they want to learn more about the title company or investing and things like that. Maybe how they could reach you. But what would you say is like the biggest or the biggest mistake in investing you've done, or like what's like a principle or a lesson you've taken away from that? Oh man, I made this mistake in investing, whatever. And then what's a lesson or principle that if you were to look back and talk to young Steven and be like, hey man, watch out for this, or be tedious about this, what is something that kind of comes to mind when I mentioned that?
Well, for starters, I would deal with like people that you trust and, you really, you feel comfortable with. In good times, of course, things are great in good times. And then you really get to know somebody in bad times, right? I had some scenarios where, during the financial crisis, I felt alone. I didn't forget that. And then I think, so that was certainly one thing I would want to avoid. I'm not sure it was a mistake because, we all made those mistakes. And like I said, if you're not making mistakes, you're certainly not trying hard enough. Mm-hmm. But in that regard, I would like to stick to, from a real estate perspective, I would stick to what you know or where you know more than what you know. So we lend in Florida, we lend in Michigan, we lend in Alabama, we buy in Puerto Rico. I have relationships in all those areas. So if the world fell apart again, and it did again recently, right? I feel comfortable. I can get on a plane and get to Detroit. I have a lot of relationships there. We're the largest private lender in the Detroit area.
Really?
In Alabama, I was just there. We have relationships there. Something was wrong. I could be in the car and I could be there in 8 hours and talk to my partners. In Puerto Rico, same thing. We have some terrific partners there that we trust. We love. These guys are young, smart guys, and they're all in with us. So, I get calls all the time. Well, you lend in, Indianapolis. Well, Indianapolis is a great city, but no, I don't even know anybody there. So something went wrong. What am I going to Google to try to figure out how to fix it, right? So I kind of go where I know to go, where I know I can rely on. And, I've been through such a hard time in the financial crisis. So I learned, I always go into every deal assuming everything's going to go wrong. Trying to make money from there, right? What if the world blows up again? What am I going to do? Well, these things. I'm going to call my people there. I'm going to call my people here. I'll get on a plane, get in my car. And otherwise, learning a new market in Indianapolis, in that example, it's a lot harder than calling your friend for 9 years in Detroit or your partner in Alabama or in Puerto Rico. And so it's a mindset of kind of going where, where you have relationships.
Yeah, going where you have a relationship. That's a really easy way to break it down. Love it. Yeah, you figured out these places. You probably studied Alabama market. You went over there. You met the right people. And it was until you had that, then you're like, all right, let's go full force. You got enough to go, which is amazing. Because I see a lot of people that just jump in really quickly. I see people that get, and if you're listening to this, it's okay, right? No one's perfect. But if you're trying to gather too much information, sometimes that hinders you. If you're not around the right people, that might hinder you. So I would say Steven gave awesome advice about that. And I'd rewind that and listen to that if you're thinking about going to a different market or a different sector. Because it's amazing, how you put it very simply. Steven, man, I know we got to run here. How can people either reach out to you, or let's say they wanted to know more about the title company, or let's say they wanted to inquire about lending, or anything, and maybe they have deals in Alabama or Detroit. How can people kind of connect with you?
Well, I'll give you our two websites for starters. It's QuakerTitle.com
okay.
and SwiftLending.com. So those are the two main. My email is Steven@SwiftLending, STEVEN @SwiftLending.com. Mm-hmm. So you could reach me at any time, and via email. I respond to people 7 days a week. There is no time off. You can call me on a Sunday. You can email me on a Tuesday night. It doesn't matter. The phone's never shut off. So And that's part of what we do, right? So,
Yeah,
and then,
no, Stephen.
once we get to know, we know our clients. We don't lend. That's another thing. We don't lend to people we don't know. We got to sit down. Even in Corona, we'll FaceTime. I'll get to know you, not for any other reason than a gut check and to sort of lay out expectations. We're not a big bank. No one's bailing us out. So we want you to know who we are and what we expect and vice versa. And then there's usually no problems if you sort of start that way.
Yeah, no, I remember I had done, quite a bit of rehabs, and I've done, I had private lending before. And at the time I got a referral, like, hey, we got, this lender, Steven. I'm like, cool, let's send him with you. He's like, no, he wants to meet first. I'm like, in person? He's like, yeah. I'm like, damn, it's the first time someone said that. I'm like, you know what? I like that. Let's go. And after that, we've been friends since, and we're doing so much together. But I love the way Steven does business. He's very transparent, like you mentioned. And you guys reach out to him, man, if you're interested in any of that stuff. I'm going to put the links on the show notes. I know we were trying to get you on Instagram. I don't know if you ended up – are you on Instagram now? Or?
Yeah, we are. Personally, I'm not really there, but our company.
Okay. Yeah, I'll put the links on the show notes of the companies if you guys want to reach out to him. But other than that, Steven, I appreciate you again for coming on, man. It's been an honor to have you.
Oh, it's my pleasure. I appreciate it, and thank you for having me.
Yeah, man. So if you guys are listening to this on iTunes or Spotify, you can watch the video on YouTube. Raul Bolufe is the name of the channel. And again, I appreciate you guys listening, and I will catch you on the next episode.